question. The call of the question is, which of the following statements is correct regarding the current year change in the company's stockholders' equity? A company's year-end comparative financial statement of financial position, that's balance sheet, reflects the following changes from the prior year. So what has happened? I look at the accounting equation, which is asset is a sum total of your internal and external claim. What happened? My cash went down by 45K. My liability increased by 37K. And my other assets, oh, sorry, my bad. The cash went up by 45 and then it went down by 70K. That means what? That net 25K, my asset is coming down. If my asset is coming down and the liability is also increasing by 37K, that means there is a plus 25,000. It should be equal to your equity, liability increasing. Yes, guys, liability increasing. Yeah, so my minus, the plus, this will become a minus of $37,000. So on the whole, the equity would go down. So equity is actually going down by a sum total of 37K and 25K. So there's a overall, the impact on the equity is the asset has decreased, the liability has increased. So overall, the equity will be pulled down by 62K. Now see, there was an Excel sheet. Everybody, can you guys open this Excel sheet? So what we're trying to do is in a very, very small case. Now see, I want you to understand the entire flow that happens whenever we are taking forward a particular situation. So here I've given you a scenario where there is a startup that has happened. Okay. So there's a scenario where there has been a startup. The startup founder put in cash, and with that cash, the startup founder bought in an office supply, bought in some equipment, prepaid rent, and then so basically, can you see what has happened? The startup founder had put in 30,000 and took a loan of 20. That means there was a total available asset base of 50 when the business was started on 1st of July of year one. That means halfway in the year, the business got started. And with this 50,000 in cash, the money was used to buy some office supplies and some equipment and software. And there was a rent which was prepaid. So on the first of the day of the year, there was a rent which was prepaid. So an office space was bought, some stationery was bought, some equipment and software was bought, and the business started rolling. 2 months passed by. July went away, August went away. And they've told you that this is the activity that happened during that year. There was money collected because of the work that has already happened. So imagine a scenario where somebody just wanted to, there's this new business coming in where you can do video editing. So there was a person who just started that business. So you can fill in any blanks here, but I have a tendency to put in some kind of a story because sometimes the story is very easy to visualize. So imagine there's a person who's wanting to do video editing. All this person does is rents a place at WeWork, let's say, or a Regus, wherever there's a shared office space, rents a place there, prepay some rent, and then goes and buys a laptop and some software that is needed to video edit, and then just go and buy some major supplies so that the contracts and stuff, whatever needs to be printed, can be printed. And in order to do that, took a loan, and at the end of the day, spent all but 12,000 of the cash, and the business started rolling. Now it started getting business, and for the 2 months that this guy worked in, $40,000 was actually received. 7,000 was receivable. The work has been done, but the money has not yet been received. This guy purchased some extra office supplies for 900. But I've also told you that at the end of the 2 months, there was a supply stock that remained of $4,200. During this year, the salary was paid, bills, so electricity, repairs, bills, equipment, all of that was done to the tune of 33,000. And then since the business has started rolling, let's say another software was purchased, another peripheral was purchased for 11,000, of which half of the payment was done in cash and the other half was payable a month later. The loan that has been got an interest rate of 6% per annum, and no amount of that interest you've paid so far. And the equipment that you've bought, the depreciation of that equipment should be done considering a 3 years shelf life starting from the date of purchase. Now, this is a very classic statement, and let's assume as accountants you've been approached to now give an advice to this startup founder whether his business or whether her business has been able to generate profit, and is it advisable to continue on with that. So imagine in your mind that there's a person who's just completed graduation and is contemplating whether this guy should get into the proprietor mode or whether this guy should go and pursue his higher education. So the business went on for 2 months, and now he's asking your expert opinion because he has no idea about accrual concept of accounting, and he wants you to advise him whether this business is a good news for him or not. Okay. So how do you start? What we're going to do is we're going to do this entire sum together. Okay, there are certain things that I have linked and not, so some part of it would be linked, but many of it you would have to do it on your own. But if you're able to do this very simple exercise, we would be able to understand how the items are flowing through one another. Okay, so let's start with the first one. Okay, so they have already given us a beginning balance sheet. If you guys realize, we already have a beginning balance sheet. Okay, so I will just link my beginning because I want you to understand how your assets, how your beginning balance sheet will lead to an ending balance sheet. So I start with an equipment and software. So I'm just linking it with the figures that I have got it. Okay, so I start with the assets of 27. I know that I got supplies and supplies cannot be my fixed assets. So I start the supply of 5,000. So typically what would have happened is this guy would have paid a deposit of 1 month and would have entered into after paying the rent for the month of July. And then in August, this guy would have paid another 6,000, 3,000 for August and 3,000 for September, right? So if I look at it, I actually was a prepaid rent, not of the entire 6,000, but actually I would have paid 1 month's rent in advance and the other would have probably been a security deposit. Okay. So there was an owner's contribution to the tune of 20,000 that we already saw, and there was an equity to the extent of the loan. Loan was there to the extent of 30,000. Yeah. And in the end, there was a cash, but you can also construct something like this because we are trying to come up with your cash flow from operation. So we are trying to construct your cash flows, beginning, ending, and the cash statement, which would help you develop your cash flows. Okay. So typically, I'm going to build up my cash account, which is I start with the money of 20 and I took loan to the tune of 30 in my account, and then I spent this money, and all of them are actually cash out because these are the credits. So I spent in buying my equipment, I spent in buying my supplies, I spent in buying my supplies, I paid the prepaid for the month of July, which should be this, and I also had a security rent deposit, which should also be half of $6,000. So I'm left with a cash of 12,000. And if I look at how this thing will reflect in my cash flow. Now see, I'm not, did I make a mistake somewhere? Oh, I'm sorry. The own contribution is 30 and the loan is, the own contribution is 30 and my loan is 20. Yeah. So basically the first part is being given, but I've still reconstructed it so that you can help understand how the cash flow statements can be generated. I've filled this figure for you. But general rule initially, see, supplies is an operating cash outflow. But since you're starting your business for the first time and this is the rule out, I have put everything that I have done in investing activity. And the money that I have put in becomes my financing activity from my from different sources as well as for your own sources. Okay. So initially, since this is the first time when I'm constructing my cash flows and I'm a startup, I would put everything in investing activity. If you want, you can also split it into operating for supplies, prepaid rent, and security deposit. This could also be operating cash outflows. But general rule, since this is the first time when I'm setting my own business, I have put everything into investing and I have put just the financing and the investing and I have constructed my cash flows. Then next year, this information has been given to me when I am starting to do my work. Okay. When I'm starting to do my work. Okay. Let's begin with my income statement and so this is, so what we're trying to do is for the year that went by, I'm trying to figure out what is my cash in, my cash out, what would be my statement of shareholders equity. So what are the basic financials? We have to draw an income statement, we have to draw a financial position statement, we have to draw statement of changes in owners equity, we have to draw comprehensive income, we have to draw a statement of and cash flows, and ultimately the notes, right? So we are trying to construct all of them here. Let's start with the common ones that we are aware of, which is receipt from services. How much has been the income this year, guys? Can anybody tell me how much has been the income this year? What should go to my P&L credit? I am debiting cash. I have already received this money. I am debiting my receivable. So my accounts receivable is 7 and my P&L, which is sale income, would be $47,000. Okay. So I receive 40. I will be receiving 7, which will be reflected in accounts receivable. And I will credit 47 because that has been the income that I have generated. So I'll simply put it now. So what I do, I go to my revenue from services and ideally this should be a sum total of my 40 plus 47. So basically 47. Yes, everybody guys? Uh, okay. What is my office supplies expense this year, guys? Can anybody quickly tell me? What is my office supplies expense this year? How much should I be saying is my expense for office supplies? Yes? The expense, guys, the expense. What is a P&L hit? See, understand, try to visualize. I got materials worth 5 and 9. So basically, I got material worth 5,900 this year till now, out of which I am already left with 4,200. How much did I use? I bought 59. And when I go and do a stock take, I know 4,200 worth of office supplies is still lying with me. So I got 5,000 worth of office supplies. I got further $900. So if I make a T account for office supplies, okay, what would happen? So there are two approaches, guys, okay? No, again, you're wrong. Yeah, exactly. Uh, Yeah, correct. So see, there are two approaches to this. Either what we do generally. Now see, this was a first time business, so we have developed and built up an account for office supplies. Generally, it's a consumable item. We put everything in P&L and then we take it out from the P&L and put it to the balance sheet. Are you able to understand this? Since office supplies is a consumable item, general rule what we do is just debit P&L and credit cash or payable. And then towards the end of the year, whatever is left, we just take it out from office supplies and put it into the balance sheet. That means there is this concept of period versus product cost, guys. If anything is a period cost, it goes and hits your P&L straight away. If you want something to make a product cost, we actually put it in the balance sheet and then we take it out and put it into a period cost every year. Think about it. Every time when we make goods, we treat it like a product cost. We put it in the balance sheet and we call it inventory. And then as and when we sell that inventory, it is taken out from the balance sheet and put to the P&L account, right? So what have we done? Any cost which is a product cost means it is not going to hit the P&L. It is going to hit the balance sheet. And then slowly you're going to use it and seep it into your P&L and use it. So in this case, if I talk about, since it's a startup, and it was not a regular growing business, so you would not have put it into the P&L straight away because there is an opening balance sheet. So what you did in the office supplies, we are treating it like a balance sheet item and we are debiting it with $5,000. Must have been to cash. And then again to cash was $900. And then by P&L, basically by consumable, whatever you would have bought, the expense, let's call it a stationary expense. Okay. What we did, we don't know this, but we know that the closing balance was 4,200. So this is actually a plug figure. This is actually a plug figure whereby we add 5,900 and then we deduct 4,200. So I know that the balance is 1,700. So my expense consumption this year was only 1,700. Is this clear to everybody? Is the T account construction okay? Sometimes I feel if you have a very good and a very clear idea about the T's always help you give you the right answer. Okay, so remember what is a plug, what you're freezing, the T should always work. Okay, so I go to my income statement and I say, and in my income statement, okay, sorry, my office supplies would ideally be, I start with the I start with 5,000, what I got. I further added 900 and then I took out 4,200. So I consumed only 1,700. How much is the rent that I'm going to take this year in my books, guys? You paid how much? You paid 6 plus 6. You paid 12. But you have ran the business for only 2 months. You ran the business for only 2 months. So the rent, has to be equal to. So ideally, how would you calculate the rent? This was paid for. So I want only for July and August. I ended up paying 6 plus 6, that is 12. That means my rent has to be half of this into this. So basically 6. Do you understand what I'm trying to say, guys? It's 6 and not 9 because rent has to be going on. Okay, can you give me the journal entries for this? I made the rent on 1st of July. So when I paid the rent on 1st of July, what will be the journal entry? Was that expense incurred? But I paid the money, right? So my cash would have been credited. So what I did, I prepaid that rent. How much? 6,000. Now July went. At the end of July, what is the journal entry that you, so this was 1st of July, right? Now on 31st of July, you would have made an entry. What is that entry? You are seeping this out from the balance sheet to your P&L. So your rent account gets debited by 3 and I consumed my prepaid. I did not have to pay it again because it was like I had prepaid this rent earlier. So now I use it and now it will be left with 3. Yes or no? Yes. Then what I did, I again went and in the month of August, I paid prepaid rent for August and September. That means again I would have hit prepaid rent to cash 6,000. That means on first, let's say on 1st of August, because everybody pays rent in advance, right? So on 1st of August, year one, I would have again done prepaid rent to cash 6,000. Is this clear? Yes. And then again at the end of August, this is July and August, the 2 months that I'm talking about. Again, on 31st of August, I would have made an entry where I would have debited rent and credited prepaid. So now what is the balance lying in my prepaid account? Can you tell me? So what we did, is this clear to everybody? Please do not go back to your school life or your college life or your work life to give the entries. See here, be aware and alert of what you are seeing in front of you and try to visualize it when you answer. Okay? So you say, okay, now I have my rent that was 6,000. Is this clear? Salaries. How much was the salary amount? The salary amount I had paid ended up 33,000. Right? Interest. How much will be the interest income, guys? Give me the answer. So there was a loan of 20,000 on which I'm going to pay 6% interest, but only for 2 months. Because the balance would not come here. So 20,000 loan, 6% interest, 20,000 loan, 6% interest. Yeah, 6% interest for 2 months. Is this correct, guys? Is the calculation correct? So we had, 1 second, 20,000, 6%. Okay. Oh, sorry, my bad. I took it 60%. 6% for 2 months. How much is the depreciation, guys? Look at this, guys. This asset was bought on 28th of August. That means the asset was bought towards the end of the year. And yeah, I know that you have to take 3 days, or let's say 28, 29, 30, 31 as a depreciation. But for simplicity purposes, I'm going to remove this. I'm not going to take the depreciation for this asset. Okay. In most of the cases, it will be given to you, placed to use. But see, general use, this asset was just put to use towards the end of the year. I'm not going to take depreciation on this. If you want, you can take a monthly depreciation and then, or your daily depreciation, and you can do it. But as far as I'm concerned, for simplicity, I'm going to simply take the asset at the beginning, because this asset was bought towards the end of the year. Okay. So I take the beginning, divided it by 3, and I'm going to take the depreciation for 2 months. So the depreciation is going to be 1500. If you want, yes, if you want, you can take this and you can have the number of days divided by 365. You can do that. In your examination hall, if they want it to be like this, they'll make it very, very clear to you. Sometimes they will write a year has 360 days. The moment you say consider a year as 360 days, you should know that they want you to calculate daily depreciation. Okay? Okay, so that gives me the net income of 4,600. That gives me the net income of $4,600. Everybody has this? Everybody. Okay? So I now simply take receipt for services. Now I'm building up a cash account because that will help me build up my cash flow statement. So how much did I receive for services? My cash in was only 40,000. I did not receive the remaining 7. How much did I pay for the equipment and software? I bought a new software for 11,000, but I did not pay the full figure in cash. That means I paid only half of it in cash. For my supplies, I have already spent $900 this year in buying my supplies. I paid the rent for the month of August of 3,000, and I also paid a prepaid rent for the month of September of another 3,000. And I ended up disbursing my salaries to the tune of 33,000. Can you understand what is happening, guys? Even though this person, now you know that net this guy has generated income, and because of the fact that this girl or this guy operated the business for 2 months, the net income has increased by $4,600. But the biggest problem was that when I look at cash, I started with opening cash of 12. And after 2 months, I see that my cash has gone down by 5,400. I'm left with only 6,600 in cash. If I look at my if my cash flow statement now, can you see? I received 40, I paid 9, I had rental and salaries. So my operating cash flows were less, but my investing cash flows was way more. But that's good news, right, guys? Because investing cash flow, if it is negative, I'm happy because it means that the business is growing. If my investing cash flow is positive, then it's a case of alarm, because that means that I'm shrinking my business and I'm selling my core assets, right? That means my business is shrinking and I'm selling my core assets. Hence, I'm happy if my operating cash flow is negative. We had no further capital infusion or loan repayment or capital withdrawal. Hence, there's nothing from financing activity. Okay. So this year, because of the fact that I operated my balance, my statement, cash in during the period versus cash out. Net change in cash was 5,400. So because of the fact that I ran my business this year, there was a net decrease in cash, but there was a receivable which is not accounted for here. And how did my statement of equity change? I added 4,600 of profit to my business. I added 4,200 of profit to my business. There was no withdrawal, there was no further investment. So there's no other reason my equity changed by 4,600. So if you look at it, what is the closing balance of my asset? I started with 27. I got another 11 and I depreciated that asset by 1,500. So my net asset equipment was 36,500 in my books. Okay, so either I can write it like this, or I can just say that my original cost at the US GAAP wants to know what has been your original asset cost and what has been my provision for depreciation. That has to be mentioned separately. I want to know what was the original carrying cost and how much was the figure that was depreciated. So I think I have. Okay. What was the office supplies? I now know that the office supplies in my book was 4,200. I know that there's a receivable of 7,000 that I'm yet to receive for my work that I have done. I know there's a prepaid rent of, okay, 6,000 and further, so there was an initial rent of, so I'm not separating it, guys. Okay. So for the month of September, I have one, and my security deposit continues to come from here. When I look at equity, I had put in, okay, my bad. I need to change this. Okay. So owner contributed 20. The owner's contribution went up by this. And now we had loan. The loan account was 20. Sorry. Oh, I made a mistake, guys, here. This is owners. Okay, this was wrong, guys, right? My total asset and my loan was reverse. So here I have a loan of, sorry, here I have a loan of 20,000 and there was an interest that was payable in this loan to the tune of 200. And there was a payable for machinery. Do you guys remember? I paid half of that amount that I need to pay for machinery. The other half is going to be payable now. So my balance sheet tallies. Is this clear to everybody? So what we're doing, every year we are starting with a balance sheet, which is what needs to get replicated over the years. Then we are opening our cash, the income statement, which is a statement of operations, statement of changes in owner's equity, and the cash flow statement. Every year we do that. If there is an OCI, we will have statement of comprehensive income. And then all of this will be closed and we're going to get your final balance sheet. The cash flow statement is a yearly statement, closes. Balance sheet carries on year. Is this clear? The ending balance sheet should be 6,300. I did not want you to draft the cash flow statement now. Is this clear to everybody? The purpose of this was to help you visualize the full thing, because when you do things with your own hand, it's easier to. So, okay, guys, in your CPA exam, the questions are not going to be difficult, but they're going to be tricky. And it will be very easy for you to miss out a point here or miss out a point there. I can very well expect a sim where they'll give you something like this and they want you to construct maybe just the cash flow statement, maybe just the balance sheet, maybe just the income statement. Okay, so you should be able to do this. Okay, with